Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, June 4th, 2025. It's 3:41 p.m. Eastern Time, so this will pretty much be a closing market wrap update. Although I want to go over different things as well. As I always say, stock market's not everything. Somebody asked, I just posted a reply, so if you want these charts, it'll be under one of the most recent posts before this video. Somebody asked for an update on gold, made a little funny in there. It's like updating the weather in the Saharan desert. You ask me, in a given day, it's going to be hot, dry, and zero chance of rain. But and that's because gold's gone nowhere. And that's and guys, I welcome updates. In fact, it's been a while. What I don't do is update everything every day. Otherwise, these videos will go from an hour long to all day long, 24 hours I'd be talking. So I update the things that stand out. And believe me, a lot of things drop off my radar. So don't ever hesitate to bump me for an update on anything. Gold, as I said in that update, has been locked in this trading range. It's been nearly 2 months now, going back to the bottom of the range. It's about 1.8, yeah, almost 2 months, and going sideways. Remember that we had a bearish engulfing candlestick right there. We had a sell signal on a trend line break. We had a short trade that hit our second target on GDX. That was the preferred proxy there. So a sell signal there, and it's brought us to this uptrend line right here. But again, bigger picture is this. Gold's in this sideways trading range, going absolutely nowhere but up and down in that range. And my reply was, whether it breaks out or not, I'm still leaning towards a downside break. When you look at the weekly chart, the longer term, let me do something here. Let me move this up a little bit so I can grab this. You go to a weekly chart right here, or even a monthly would probably be best. You can see that we're really stretched. It is the move up, the recent move up, again, as I've talked about before, is very indicative of a blow off top. You had a huge spike up after a long extended advance, and that run went nearly parabolic right there. And that was what we saw back here the last bull market in gold ended. We had, as I highlighted, see the surge in volume bars, a spike. There's a buying climax right there that marked a significant top in gold. It was at that previous high, followed by a drop of, I'm just roughing this is about 20 something percent. And so when you see a move like that after an extended run, again, it's indicative of a buying climax. There is nothing 100% in trading or technical analysis. It's just something to watch. So either way, that it's been a dead money trade at minimum, and there's been a couple short pullback trades in there. And again, I don't have strong convictions on it now, and there's really nothing I can see in the charts to update, other than again, and I'm glad that subscriber asked. I highlighted before UUP, the US dollar index ETF, has been in this talk about a trading range. Gold's trading range is less than 2 months. This trading range goes on for about 4 years. This goes back to the beginning of 2022 right here. You can see it enter that range, put in this double top high. And I know this isn't the dollar index itself. It's an ETF that tracks it, but a lot of traders, even institutions, will trade this. And it's just one that I'm using as a proxy right now. And you can see that we're, as I highlighted here, and that's when we got that top in gold in the correction, and we were able to pull back, hit that second target on GDX where we reversed off of. That was hitting pre-market. And so my reply that I made just now in that post in the comment section is, so we're back to that level. And if the dollar bounces off that, it's big support. Again, this is support that's contained all pullbacks in the dollar. We had a little whipsaw down through there and there as well. Both of those proved to be what we call bear traps. When the dollar broke down, as soon as it snapped back in the range, there was a big rally. And so far, not as big. We hit that downtrend line, but we're back at support. And all I can tell you definitively is that support is support unless broken, as I often say. And resistance is resistance unless broken. So if support holds, and you have those two spike lows came down there, so you want to really establish that as the new, the bottom of the resistance zone, about 26.89. So if we rally back up again, PPO is trying to curl up from low levels. It hasn't done so yet. This is the last time you had a low-level bullish PPO crossover right there. The time you had one here right on the zero line, but these are pretty good trend indicators on the monthly chart when you get the bullish PPO crossovers. And usually when you get pressed down this low, that one came, you had a little bounce, and then you had a whipsaw. It was a whipsaw, you crossed back down, but then the bottom came right there, and there was also another test of the zero line there. So watch for that. All this points to the dollar could break down. There's a lot going on right now. I don't have to tell you that on the macro front, and with the trade wars, and in the U.S. now getting into a pickle with our interest rates. I'll get to that in a second too. Somebody asked about the commented why I'm not talking about the Japanese bonds right now, and I'll share my reply there. But so let's just go off the charts. And again, if this breaks down, so my reply was, if this happens, again, this would be a net. When I say a net tailwind or a net headwind for gold, that's all that is. Talked about it many times. If you're new to the site, this is simple mathematics. When the dollar drops, it takes more dollars to buy an ounce of gold. So if you can freeze supply and demand, now in a perfect world, that's not the case. There's always more buyers or sellers, but in just a normal world, a falling dollar is net bullish for gold because it takes more dollars to buy 1 ounce of gold. Likewise, a rising dollar is bearish. So this would be a downside. Anything more than just another whipsaw would be net bullish for gold. Net bullish doesn't guarantee that gold must go up. It just is a positive bullish factor simply for that reason I stated. Now, a break here, which is still what I lean towards, if we hold this support level again, the dollar bounces, especially if we take out this trend line, is what I said, and more so, especially if we take out that recent high, that's where it's going to start getting the attention of traders. You're going to have a lot of short covering in the dollar, longs coming in, and then that will most likely, to what I said in that post, be the catalyst, whichever way that goes. In other words, if the dollar breaks that support, most likely gold's going to break out of here and continue on, make a new high. Otherwise, if gold, which is still what I'm leaning towards, I mean, if the dollar rallies off this support level that it's pulled back to, we'll probably get a downside break there. So that's my best guess. Right now, we're in a trading range. If you're frustrated, just like I mentioned, if you're frustrated in the stock market, QQQ still in a trading range, moving sideways. You can look at QQQE. This is a nice clean chart right here. Shows the equal weighted. We've gone absolutely nowhere now for the last few weeks. And, I can tell, you don't get a lot. Comments have been quiet. There was one little snide comment on the site today, and that's not, typical trollish action. We've gone nowhere here. So the market isn't going down, but it stopped going up a couple of weeks ago, actually in the beginning of May right here. So about a month ago, we've gone up, we've gone down, we've gone up, we've gone down. And, QQQ, as you know, we had a short-term swing trade. We hit the first target and we bounced. QQQ itself is a little bit higher than QQQE, which is also showing you something. Remember, one of the, we heard a lot of bulls, Johnny come lately bulls, not here, not, I didn't see many on CNBC or anywhere else, or even on the site here, when we were covering all shorts and going long here. This is where everyone started to get bullish and cite all the reasons why the market's going up. One of those included, as I mentioned, the Zieg breadth thrust, as well as other, market breadth participating. That's what you get in a bear market rally, if that's what this is. Now what we're seeing is breadth deteriorating. One way to do that, other than you can look at the breadth numbers, but you can also just look at the differential between QQQ, which is just eked out a marginal new high right there, and then QQQE, which isn't, is flattened out. You can do the same thing with SPY. The S&P 500, actually, that's flattened out pretty much. You can see, let me go here. You can see pretty much an equal marginal new divergent high, still below the trend line right here. Breakdown back test, big negative divergences. So nothing's changed in the technical posture. Yes, we're near those all-time highs, which tend to be like a vacuum or a magnet when you get there. But as I commented in the video earlier today, sometimes you fall a little shy, and that's actually usually the most bearish of all. Either way, it is what it is, guys. And I can't say much more than that. We're moving sideways. RSP, again, this is just a gauge into market breadth. an easy way to do it by compare RSP, which I just pulled up, to SPY. This is the equal weighted S&P 500 ETF, and you can see all of a sudden this one's not making a new high. As I showed you, SPY just made a marginal new but still divergent high. The equal weighted has failed to. So what we're seeing now is what we've seen, again, on a much smaller scale. I need to be clear on that. But what I've seen in every stock market top that I can remember going back decades is that towards the end, breadth deteriorates. You had the same handful of stocks. It was the FANG back in 2007, 8, and the names change, Mag 7, Mag 8, whatever you want to call it. It's just a small handful of mega cap, the largest companies in the world that have an outsized weighting to the indexes that give you that false guise of strength. And so that's where a lot of market technicians will look at the equal weighted indexes and market breadth. And again, this is on a relatively short term here. This is a 60-minute chart. When you see the major tops, those are conditions that build over months, as we had going into the 2020 top in late 2021, early 2022. So I just wanted to point that out for you folks. And also that, again, we're not going down, but we're not going up now for the last few weeks. We're going sideways. So it is still anybody's game. We'll see where that plays out. The other things I wanted to update was, here I should say were, so there's the update on gold, and there's my reply. I just covered that. You can see the charts are right there if you want to see them, the ones I just covered in the video. Somebody asked, interesting fundamental analysis, no comment on Japan's bond market. To me, that was last week's news, and I don't mean this sarcastically. If I did miss something, I might have. There are different ranges in the bonds, but Japan's long bond is the 40-year. In the U.S., it's the 30-year. I've been keeping an eye on that. I even provided a link there. That was last week's news when I think it was a week ago or so, when the Japanese 40-year bond broke out the new highs. Talk can disrupt the financial system. And we also had, remember, around the same time, Treasuries, the 30-year was breaking out. It just punched and kissed that previous high. But yields have abated on both the U.S. Treasuries, our 30-year bond, and the Japan's 40-year. Here's a link to the 40-year. You want to go to a daily chart right here, and you can see the daily candles. So I've been watching this, and I've been watching Treasuries, as you know, and we've covered those quite a bit lately. Told you about. So if you see the recent highs get taken out on the Japanese 40-year and the U.S. 30-year, I would fall out of my chair if the market didn't react in a negative way. And I'm talking just even a slight punch through there. And obviously then it's incremental with every tick higher above that. So if it's not right away, to see a clear breakout into new multi-year, as I said, we're going back multi-decade highs if that happens. So we had this little shot across the bow. The markets wobbled a little bit, started to freak out, but you can see, I guarantee you, I don't know the specifics, but we all know, and this is that, the central banks don't try to hide it. Japan, the U.S., they do not try to hide it. They will manipulate the bond market to the biggest extent that they can. However, the bond market is so massive and so huge, they can only do so much. Remember, the Fed can cut and raise the federal funds rate. They can do quantitative easing. They can certainly get in there and do their best to try to, steer the market, but they can't completely outright control. If you ever get to the point where the bond vigilantes say that's enough, and maybe Trump's big bloated bill is going to be the trick, we'll see. I don't know. Again, I don't have to. I can sit here and everyone's been listing 1,001 reasons why rates might go higher. But it's simple. If they do, then I'll react, and then, that'll be a negative. And if you see yields continue to abate, then, and again, if it's by organic natural forces, not a big stock market sell-off. If you see yields dropping, on U.S. Treasuries due to a flight to safety bid, because all of a sudden the market's down, 5-10% in the next couple of weeks, which wouldn't shock me based on the technicals. But we need to, first things first, we got to spur that. We already have the sell signals that I gave you a couple weeks ago. Nothing's changed, but obviously, just like gold and other things, sometimes you get a sell signal. We broke down there. This is RSP, the equal weighted S&P. We broke down, we dropped. We had that initial drop, hit the 200s, we went sideways for a while. or we can look at SPY, or we can look at QQQ. We know the story. You know, sometimes you go in these trading ranges and you just have to be patient. That's one of many of my own yogiisms. I make a lot up, and one of them I always say, if in life patience is a virtue, we've all heard that saying. I say in trading it is an absolute must. So there are times where you're going to get in these kind of ranges. You can, as I did, predict which way they're going to break, but then ultimately you have to act and respect whichever way they break. So that's it. That one broke down. It's a great sell signal. We were already short from the highs. We had sell signals there. That was the major sell signal when the 200s were taken out. That was kind of the all-in moment. Gave a little kickback rally. Took that leg down, got out of our shorts, started getting out just before the lows and of the morning of the day they bottom. Milked up the bulk of the rally, and then that's it. And that's here's where we're at right now. We're above, and that's why I'm kind of in wait and see mode on the long-term positions. Those short-term trades that I gave you a couple. When was that laid out? It seems like forever, but it's not been that long. We shorted QQQ right here above anticipation of the breakdown. Hit that first target, bounced. And we're right about within basis points of where we first entered. And again, we already hit and bounced off T1. So you've got that beautiful bearish rising wedge. Again, I've commented quite a bit. The goal of this video, I've already done the equity markets. I mentioned that stop will be different depending if you covered there, if you shorted here. If you're long, you have a whole different thing. Your stops, if you're long, probably should be below this recent low. You got a big old gap that'll be backfilled. If we go down to my T2, especially if we go down to my T3 or 4, as I talked about, you're going to increase the odds of a much more powerful wave of selling, especially if that T4 level is taken out, as I've covered in recent videos. But right now, again, the markets are at a bigger risk at this moment, as I talk and have been for the last few days. They're at a bigger risk of breaking out to new highs only because they're within spitting distance, right? We're only, very close to new highs, and we're quite a bit further down from taking out the 200 days again. So we'll see. And again, the market's not everything. That's why I've been getting trades out to you lately. And told you in the last couple of weeks, one of the better looking sectors in the S&P 500, in my opinion, is healthcare. Even have some targets there if you're a bull. You have a divergent low. Kind of look at this chart, wouldn't surprise me to see another thrust down. I would lean that way right now, and that might be make for a better setup if we get rejected here off that T2 and the downtrend line. Come on in, make a new low. But either way, if you remember, we were also last year short the biotechs. I gave you a trade here on the site. Let's see if I created that stop. That would have been back in January of 2025. Actually, oh yeah, right here. We had broken down. We had this big, series, just like the stock market, divergent high, big tradable drop, correction, went up, made a marginal new, still divergent high, had this big primary uptrend line, breakdown back test right there, and then went on, hit my first, second, third, fourth, and coming close to the fifth target. But again, made it clear in both videos and in writing, no more shorts. Cover all shorts, going long, full long there. So that's a truncated trade. I didn't expect it to get to T5. And now here's where we are. We're right there at a downtrend line. And I'm going to draw this line in there, price resistance. Big old gap right there, reaction high. So you have dual resistance. If it breaks out, that's going to be bullish. And I would lean towards another move down here, a rejection here. So you could short biotechs, but I've given you a couple biotechs lately. As you know, I've been long side trade ideas have been sparse, as have the short trade ideas, because I'm not seeing a lot of attractive things that excite me right now. But the ones I gave you a new one today. What was that called? That was OSCR. Oscar Health, again, just a pullback to support healthcare stock, more of healthcare plans. The VRV, that's a speculative one, but the other day I highlighted that again. We have nice support here. It was pulling back to, and it broke out above the downtrend line. I highlighted that as an objective add-on or new long entry. It's moved up pretty nice, but again, it's 9% in a day, but that's nothing. That's the nature of this stock. So I don't think a 9% move is a huge deal, especially because volume was okay. I've seen some volume coming into this thing lately. It's not super high, and these still remain the targets. And this one is biotech. And so, but it's going to march to their own drumbeat. Biotech sector, I've always said this, there are sectors such as gold. Take GDX, for example. And by the way, to be long or bullish or long gold is to be bullish or long GDX and vice versa. The miners just move in line with gold. So that's that. Biotechs are different because gold, they're all chasing after the same thing. They're all pulling gold out of the ground, trying to sell it. If the price goes up, their profits go up. And if the price drops, their profits drop. It's that simple, the profit margins. Biotechs are a whole different animal. You can have a company that's working on, a cure for XYZ, and then another and then that's their only drug in their pipeline. That they get it, boom, they can change their fortunes. That stock can go up thousands of % in just a year or two. I've seen it happen many, many times. Or they've got all their eggs in one basket, and in phase 2 clinical trials, all of a sudden people are getting sick and dropping dead like flies. FDA is going to yank it, and now that's done. That company will just poof if that's the only drug in their pipeline. Or you go to another biotech company, they might have a very thick, deep pipeline, a lot of drugs and with promising results or existing drugs on market. So what I'm trying to say here is in biotechs, you can definitely, and you definitely need to be a stock picker if you're not going to go with a biotech ETF. In other words, birds of a feather do not necessarily move together in that sector. They absolutely move together in GDX, in the gold mining sector. Okay, just want to make sure, and yes, I've caught up on all recent comments. If I missed anything, just, if I missed one back here or whatever, just throw it under the most recent post. I try to get to those as soon as I can. Here's a couple here. AVD, this is a trade idea. This one, as you guys probably know, I've covered it quite a bit in recent years, and I talk about it here. Somebody, question on the trend line drawing, and I talked about, and as I often say, it's more of an art than a science. And so I shared my trend lines here, and I talked about this trade a little bit, and in that comment reply, I mentioned you can click on the symbol tag. So if you go like this, see it's hyperlinked, and I click AVD, it's going to load all the charts every time I've mentioned or covered this stock. Going back in reverse chronological order, obviously starting with the most recent. So in this one, I know it was towards the end of the video. That's when I covered the ag input stocks. I've been bullish on those since last year. We've got quite a few. And in that video, I talked about it back then at the time, and we had a trade on it. A lot of these have already hit multiple targets. It was right here. We had a divergent low. And I said at the time, back in January, last time I covered this stock before today, that a breakout above $5 would be a buy signal, and I gave you this target, which was hit here. I believe that was the same first target, 662. It's the first target now in this trade. And that might even have been hit in the pre or post-market session. We came very close. Then we reversed, went on. That was about a 25% rally, so there was your buy point. And so if back then, but we were here, before we even had that breakout and that powerful move up, if I thought that was significant support back then, or resistance, because remember, in trading and technical analysis, support, which is what this was, once broken becomes resistance. So you run up, boom, hit resistance, pulled back down, we broke the support, then tried, boom, boom, couple attempts to get back above there. When the market saw that it couldn't do it, that's what happens. Bulls realize, can't do it, and they throw in the towel, and then that just put in an even bigger divergent low. And as you know, we've been along a lot of these. These are long-term trades. I was very bullish on that sector last year and still am. A lot of them have been hitting targets and getting up into the upper targets. I'll go over these in a second. But my point is that's still the same $5 level. If I thought it was a good support and resistance back here, the fact we had these reactions on it since, much more, or additionally, I should say, further validates that, is the right way to say it, is a significant level. So it's very easy. Set up our price alert. Remember a couple weeks back, someone was upset one of our trades, which they all quite often do, hit a price target in the pre-market session. You can do the same thing, and I went through the video, covering what I've covered for many years on this site now, OCO orders, the best thing in the markets and trading and investing since sliced bread. One cancels another. Set your sell limit orders to fill in the after hour session, but then do your stops only to be filled in the regular session. That's how I like to do it, and for the reasons stated in that last video. However, you can also do what's called a buy stop order. So the OCOs, remember, once you enter a trade, you'll use the OCO. One cancels the order, another or the other with that one order at your price target or targets. I give you multiple targets on this trade. You can set whatever your preferred target or targets. Some people like to scale out, take a quarter out there, quarter. Some people hold out for the long-term targets. Some like the quick targets. Again, that's why your stop is going to be dependent on whether you're going for T1, T2, T3, T4, or any of all of those above. So that'll determine your stop. Now, so an OCO says, all right, when you break out, if you pop $5, you take the trade, you set your sell limit order there, and then your stop loss there. Or you set your sell limit order here and your stop loss there, whatever, based on a nice risk-reward ratio. Now, so that's the OCO, and then you set it and forget it. Make sure they're good to cancel, and one or two things are going to happen. You're either going to hit your price target, and it's going to automatically take book profits for you there, close that trade out with a sell order, or you're going to be stopped out. Nothing in between. Stock, we're not going to go sideways forever. The other thing you can do is a buy stop order. That is, if you don't own a position yet, and you're like, yeah, you know what, I like this one, but are you right? If I jump the gun, it hasn't broken out yet. So I want to put a buy stop order at, let's say, 505 or 502 or whatever your number is. That is an order, again, if it's set good to cancel, that you don't have to be around in front of your desk. Now, you probably want to do that you have to do it on regular session if it's a buy stop. Only a buy limit would be otherwise. So a buy stop order will only trigger if the stock goes up and then hits your target. You got the 200-day right there, a little bit above it, and so that will then execute and get you in the stock once your whatever buy stop level is, 506, 508, whatever you want to do, 510, and then it'll get you in there. And then once you get the fill, you can get to your desk and put your OCO order in after that. And this is in the agricultural input sector. These are the stocks right here. I've covered these in many videos over the last year. CTVA, this is when I started covering these guys. I guess it was back here shortly after. Put in this divergent low. This one's been really strong. Just broke out to a new all-time high right there too. Nice breakout right there. It's been shrugging off these divergences for a while. There's just a lot of momentum in this sector. These are a lot of fertilizer and other agricultural inputs. NTR, I don't know if I covered this one recently, but that just hit the fourth target about a week ago right there. And so far, not much of a reaction. These are just got a strong bid underneath, and that's still the next target there, T5. May add additional targets, and this thing still has a long way to go to get back to where it was back in 2022. All of this is a bottoming sector. So what I like to do, I like to catch tops and bottoms, and you know me, I have the patience of a saint. If the charts are still telling me to stick with a trade, I'm going to stick with a trade. These divergences just got bigger and bigger. I believe I was highlighting this one back here, and we had a nice run. That was high double digits, maybe even triple digit run from low to high. Let me see. That was about 26, not triple digits. Some of these guys move more than others. I wasn't even paying attention to the prices on the right. And that's it. Boom, 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 boom. And like many of my trades, hit T1, pulled back, hit T2, pulled back, hit T3, we pulled back, hit T4. Not much of a pullback so far, but it's still good. We have some divergence. So that's what stops are for, or recycle back in when it gets there. Let me hit on the rest. Some CF. We recently hit, this one was laid out way back here. We hit my first target right here, T1, had a nice, went a little higher, nice pullback to the support, but also divergent low. And it's running up. We've already hit T1, which opens the door for a move up. Now there is an uptrend line, so if broken, that's probably going to send it back down. But maybe we continue on up, and that's still my second target on that one. Mosaic, I think this is the one I updated for you yesterday. Yeah, because I had no alert go off. Just hit T3. We still have a T4 zone. Nice move on that one. ICL, that one I would have updated back here in February. It hit T4 and post. It looks like in PM pre or post market. I think pre market. Oh yeah, and then it had a nice reversal. That was a nice one. I believe I got out to you in pre-market, so you had time to exit and then recycle back in. There was a nice pullback right back to this is how this stuff works. Hit resistance, and within one day, the next day we pulled back where to? Support. Where was support? My third target. It was resistance on the way up, and then it acts as support on the way down. And then it hit the 200-day moving average right here, and then bounced. And you can see we're diverging, but these guys are just burning through these divergences. And you just got to be careful with that, because these divergent highs, all of a sudden this sector can turn. But right now, a lot of momentum going into that sector. And again, they're still well off the highs. FMC fell out of this trading range. Nice. And it's starting to look, some of these, when I did these videos last year, I warned you as I go down the list, I'm going to the lower priced ones that have higher risk. And I told you my preference was the bigger names back then. But some of these lower ones, what happens is the big names usually go first in the sector, just like the gold mining stocks, GDX, and then GDXJ, which are the juniors. They tend to follow afterwards, the lower quality but faster growth companies. And so this one, if it can pop this recent, got a big old gap to backfill. They'll probably run up here and want to check that trend line. SMG, Scott's Miracle Grow, recently coming off a divergent low, big basing pattern right here. So if it can break above that multi-year basing pattern, that should be bullish. And UAN, again, all these have been covered, but the same story. You can see those that haven't run hard yet have the potential to, because they look like they're in multi-year basing patterns. So if they can break out of the top of that multi-year basing pattern, that should run as well. This one I liked. The ones I had targets were the ones I gave you as my favorites. T4 was hit back here. I would have already covered that a couple weeks ago, and it's been holding there. It's at the top of my T4 zone again. Those targets were laid out. Gosh, you can go check a lot of in and out re-highlighting. That's what I do when I'm on a sector, whether it's bullish or bearish. I'll highlight objective pullbacks, re-entries. And this one you can see kind of base there for a while. It had this big base and broke out. So it wouldn't surprise me to see it continue. Oh, I'm sorry. I did have additional targets there all along. So yes, so we're at T4 and I do have additional targets. BIOX or Bio Series, divergent low. Again, we're getting down to the lower, more speculative names, lower price, more risk, but they're all starting to set up and look like they might want to play a game of catch up. This is the one I just gave you today, AVD, one of the lower price ones. Seed, SEED, I believe this is a Chinese company if I'm not mistaken. So just kind of keep that in mind with what's going on right now. That's it. The rest are too small. That's the sector as a whole right there. And you can see it really starting to rip. That's it. Let me just stop it here. So I'll continue to hunt. Remember, we're in the summer doldrums, guys, so patience is required. Market's going sideways. I don't force trades. If you're here for quantity of trade ideas, then you're in the wrong place. I focus on quality. I only post trades. I don't take every single trade I post. I take a lot of them, but some I might have... I might pass on for various reasons, whether I have a similar stock or exposure in that sector, or maybe I just, hey, it's an objective looking trade. I'm passing. I might not be taking it, but here it is if you like it. And I try to do that for everyone. I don't want a bunch of minions here that mirror my thoughts on the market. I know that, a lot of you have made clear that you are bullish looking for new highs. And so the same levels, even if it's the indexes that I'm looking at, and for pullbacks to support or support levels to enter a short on a break, you can use those same support levels to buy a pullback to support to go long. And the resistance levels that I might short at, expecting something to reverse. If you're bullish, you can use that same resistance level to wait for a breakout above it and then go long. So those are, that's how to take advantage of this site, whether or not you agree with my analysis, because my skill set, I believe, lies in identifying key support and resistance levels and trend lines and other things that are technically significant. And for those reasons I just stated, either going to act as support, you can go long there. If you're bullish and that's your outlook on the stock or the market or the sector. Or on the flip side, if you're bearish and I identify a key support level, you wait for a breakdown below that support level to go short. Okie doke, I'm going to wrap it up here, and this is the last one for the day. This has been Randy Finney with Right Side of the Chart. Have a good one.